Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. Now there are some obvious differences here that I've been previously at pains to point out compared to the Chicago contract. However, there were in recent days also quite a few similarities here with the Chicago contract. There was a bullish halfway hesitation in July, though a singular one, during the pullback up with an initial target in the 713 area and a secondary target in the 742 area. Both have been achieved, unlike the ones in Chicago. We also had the same monthly key reversal in July, and, this is key, a similar upper tine currently at 770 of the late March to early July shallow bullish shift pitchfork. This upper tine had capped the market in August, much as the version we'd seen in Chicago, and caused a breakout lower, out from the recent July base bullish rising wedge pattern, with a target below in the 697 area. This was for the wedge pattern and was especially interesting because that's where we also have the 50% absolute Fibonacci line. And a little below that, the 50% Fibonacci line for the big old 2011-2019 move at 692. Prices overshot this support and went down as far as breaching the odd combination of the rising short medium moving average, currently at 718, the lower tine of the bullish Andrews pitchfork, currently 722, and the middle tine of the bullish shift pitchfork, currently at 683. If that wasn't enough, just below was at the time the slowly rising medium moving average, currently 677. Now what that all meant was the market was halted and turned back up 3 weeks ago. In the process of moving up, the market created a small reverse head and shoulders pattern over the last August to late September period. The market broke up through the neckline Thursday last week with a large key reversal up and exploited the move higher the following Friday. This move up led to having an initial target X not too far overhead in the 77.76 area and a secondary target X1 in the 693 area. Now normally I would add here that a secondary target is usually not hard to get. However, even though we are close, the initial target X in the 776 area has become hard to get. You see, Friday last week and last Monday's high hit the upper tine again of the previously mentioned shallowly bullish pitchfork. Plus it also tested the high back in August at 769, dipping down after failing at both. I'd now like to add one more thing to the mix. It's the newly drawn early July to early September bullish shift pitchfork. You see, the middle time for this currently runs through at 778. This adds further, as I said, to the mix, initially in a capping if limited way. It all depended this past week on if we would see a move higher over this cap and towards target X and target X1. If we did, then the bullish tines were running the market higher. If not, then the old upper tine, and to a much lesser degree the new middle tine, are running the show. So far it seems the old upper tine and the new middle tine seem to be in control. But the market still has some time, maybe even until the end of October, to really make up its mind. Just beware of false breaks in the meantime. And finally, all this is in the shadow of July's monthly key reversal up. Minneapolis wheat. I have to say it here again. I continue to admire this contract, really admire this contract, and with some unabated passion, as it has been and still is a series of brilliant pieces of technical action. Now, I've repeated this same mantra now for months, yet there are a number of, let's be honest, quite a number of huge differences here in this contract compared to Chicago and the Kansas City contracts. Now, for starters, and perhaps supremely important, the December 2020 to early April 2021 bullish Andrews pitchfork, which has run this market higher so successfully, was and is still valid. Though you would have to allow for some aberrations that we've seen over the summertime. The key feature over the summer had been how the market had punched up and down, over and under, the fantastic upper tine, currently at 988, of the bullish Andrews pitchfork. During that time, prices still moved higher, and when it looked like they might fall, well, those very same actions also allowed me to draw a more acute April to May bullish Andrews pitchfork. This second one had grown like a branch out of the first one. 7 weeks ago we found the lower tine of this new Andrews pitchfork crossing up over the upper tine of the old Andrews pitchfork. And there's the rub, because this conflict stopped the market rise for a second time, with prices then pitching lower. Thus the newer, bullish and more acute Andrews pitchfork is no longer viable. I would normally retire it, but it looks so good at showing the deviation and the failure of the deviation that I think I'll just keep it there, because it looks so pretty, like a classic motor car with a non-running engine. Anyway, so where are we now? Well, the market curling lower had seen prices start to accelerate their drop, down through the rising short medium moving average, currently at 902, and below the middle tiny original bullish Andrews pitchfork, currently at 915. However, both these two supports eroded the bearish incentive and re-established the original bullish incentive, such that this Friday saw the highest high in recent times. Even if it was with a bearish looking gravestone doji at the one point, but ending up just as a straightforward bullish looking pattern white soldier. Get it right one day. Hence I would keep a close eye on that combination of the rising middle tine and the flatlining to rising short medium moving average. Any serious deviation from there would be an indicator of the next move, obviously assuming there is no false break. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.